What is the market telling me this week? This is the place to be for news for your net worth, and I'm your host of the Nick Rutherford Report. So smash that like button, subscribe to this channel, and share this with someone who would get a lot out of it. Let's get right into it. The first thing that happened this week that is very interesting is the Fed had their meeting. And according to their meeting, they're leaving rates unchanged, and supposedly there's going to be a bigger than expected QT taper to start with in June. How am I interpreting this? Well, the market has shrugged it off. So to me, it's kind of a big nothing burger. Like, everyone is very obsessed with it, but it hasn't really affected things. They've said that higher interest rates will destroy the economy, but the economy's been chugging along. Or has it? Well, we'll get to some specifics here about what the market is telling me. But I find it very interesting, but at the same time, it's not really helping me preserve and protect my wealth. So I'm not really too worried about it, at least in the short term, because everything is looking good. The market is continuing to chug along. So another interesting article came out that I think is worth pointing out. And the reason I'm pointing this out is because Wall Street gets obsessed with different things like this. Well, the unit labor cost soared in Q1. Is the AI productivity boom failed to show up? Well, did it? Did it fail to show up? I've got some interesting things to say about it later today, but here's a graph. And the reason I'm putting this up on what I'm watching in the market here is because Wall Street puts this out like it's important or like you should care about it. Another thing that happened, Bitcoin ETF suffered one of its worst days ever. And I found that interesting. But again, nothing to freak out about. Because I believe that my thesis for Bitcoin is it's going to go higher. As long as the network doesn't break and more people want it, eventually it will go higher. But I'm not trading for today or tomorrow. I'm trading themes. I'm trading themes for the future. Like, what's the theme for the future? What's going to make me money over 2 years, 3 years, 5 years? Because, taxation, inflation, and investment mistakes are what can really kill my net worth. But what I want to do is identify trends and then check on the trends. Yeah, Bitcoin sold off a little bit, but you know what? I was buying Bitcoin during the FTX blow up, so it selling off a little bit here doesn't really concern me. It's halving, and if history is any guide, it'll be a lot higher at some point in the future. Now, this is not me advocating for you to go out and buy Bitcoin, but I thought it was important to bring up. Now, what's even more interesting is the yen. Now, the yen spiked even higher, and that went up to 160 to the dollar. And why this is interesting, because the higher it goes, the more problems we seem to have, and when it goes higher, yields seem to go higher. And here is an interesting article. This just goes along with my theme of figuring out what is the trend and how do I spot things that are corroborating my trend. So this article is called "The Safe Haven Yen Tumbles Towards Zero Against Gold." And this is the most interesting chart I want you to look at. If you are living in Japan, you're going to want a lot of gold because, well, gold's going towards infinity in the Japanese currency. At least it is right now. Of course, it could pull back and reverse, or something could change the dynamics. Maybe the government would stop printing so much money or issuing so much debt and then have a strong currency. But I don't think that's in the cards. But of course, I could change my mind at any time if they change policy. But this I find very interesting because it just goes along with me looking at the market to figure out what trends are in place. And this is a trend that's in place. Will it happen in the US dollar as well? Well, we'll get to that in a minute. But the first thing I want to do is I want to point out George Robertson's tweet here. And he says, initial claims should be the central to your economic and market analysis. They indicate, prove there is no Federal Reserve monetary policy. They prove the economy is white hot, and they suggest this growth will continue into 2025. The reason that I follow and like George Robertson is he was literally the only person I could find in 2022 saying the market would go up. Everyone else thought the market was going to go down. And his thesis is that the Fed is just printing so much money that it's stimulating the economy. So the hike in interest rates actually have the absolute opposite effect, because they're giving more people money and their government is spending more money, and it's just making the economy go up. And I tend to agree, at least for now. Of course, everything is subject to change, but I agree that initial claims should be central to the thesis of like what the market is telling me, because if the job market is good, then people are going to make money and corporations are going to make money because people are going to spend money, and then their stocks are going to go up because they do better. So what is this telling me? Like, what happens next and what am I doing about it? Well, remember, my central theme here is that I want to preserve and protect my wealth. And I think the best way to do that, after studying and reading all these books on my wall, is that I need to observe trends, attempt to get in early on the trend, and then continue to monitor the market to see if the trend has changed. And one of the biggest trends that I've been on and that I've been monitoring is this disconnect between the old economy and the new economy. And what do I mean by that? I mean, there's a digital transformation going on. Google, Amazon, Apple, all those type of companies are making more and more money while the old world is making less and less money. Now, here's a great example of this. I think we're almost in like a stealth recession because some companies are doing great. Other companies seem to be imploding. Like here we are. CVS cuts its annual profit forecast and flags challenges for 2025. Shares fell 18%. CVS completely crashed. It went really far down. Now, you compare that to what happened with Apple the other day. Futures gained, boosted by Apple's blowout buyback, and Apple just went up because even though they're not making like a ton of money, they're still doing okay. They're not doing terribly, and they're doing all this buybacks. They have lots of extra cash to do buybacks. And what is this telling me? This is just confirming what the trend that I'm watching is telling me, that there's a set of companies that are going to do well and a set of companies that are going to do badly. And I think that to preserve your wealth and profit into the future, you have to identify these, be in early on the trend, and continue to watch to see that this is happening. And these are the type of articles, they're just confirming to me that my investments in stuff like Apple, Google, and other things that I'm not going to mention here because they might be smaller, but just the normal tech stuff that you're used to, that you've probably heard about, is going to do well, and other things are going to do bad. Of course, this could change in an instant because I think we may be in a stealth recession. And the reason I say that is it's a recession, but it's not really a recession because some things are doing great, other things aren't. So I'm just going to try to be in the things that are doing great, that I think are going to benefit from these trends over a 2, 3, 4, 5, 10-year sort of horizon. Just kind of giving you where my head's at and what I think the market is telling me. And then I'm just looking for confirming signals. So right now, the signals are confirming that my thesis is right, and I'm just sitting here, I'm waiting, I'm watching, and the market will tell me when I need to do something drastic. And that's why you should subscribe to this channel so you can watch me watch the market, and we can watch the market together, and we can figure out what to do next. Now, another interesting article that came out, this goes along with my trend that we're printing so much debt that maybe the currency is weakening. It's definitely been weakening, and it will probably continue to weaken against certain things like equity, dollar, gold. I'm sorry, I misspoke when I said dollar there. Just trying to rush through this video. Gold, equities, maybe real estate. Real estate can get hammered if interest rate is going in a direction that you don't like. So I think that you really have to zoom into particular assets that you think are going to do well, like things that I just talked about with the digital transformation. Well, Chinese speculators supercharged the gold rally. This is according to the Financial Times. So the Chinese market allegedly is buying a lot of gold. And you know what? There's a historical parallel here that I find very interesting, and I should have seen it before. Now, granted, I've opened my gold position years ago, so I'm already profiting from this trend. I'm just kind of pointing out here that I'm monitoring the signals to see if the trend is intact. And you know what? The Chinese government did something over there to implode their property market recently. And if you think about it, this makes perfect sense, and we should have all seen it before. If you remember the great crash of 2008, the real estate market in the US imploded, and everyone got worried and they rushed to buy gold. Maybe because a lot of people think that real estate is a good store of value and something that can make them money or build their wealth. And then if it implodes, they freak out and they look around, what could possibly be something that I could invest in? And after the great financial crisis, a lot of people fled to gold. And you know what? This possibly could be China's moment for the same repeat. They always say history rhymes, but it doesn't repeat exactly. Well, maybe it's repeating right now in China. So this is something that I'm watching closely because it just confirms my thesis that more and more people are getting excited about gold. So another interesting article that confirms my thesis here is South Korea's central bank came out this week and said they may buy gold in the mid to long term. So this is just another signal that fiat currencies are probably going to be weakening against assets, including gold. So if I want to diversify and bet on these trends, this is a trend that I see happening. This is a trend that I see continuing. And this is exactly why last year when everyone hated gold miners, I was backing up the truck on some of my favorite gold miners and buying them hand over fist. So all I'm doing here again is I'm just trying to convey to you how I'm watching the market so that we can take advantage of it instead of being taken advantage by it. And that's what I want for you. I want you to watch the market, and we'll see what the market is telling us. Here's a very interesting thing from history I wanted to point up and bring up. So you may not be familiar with this, but in the 1979 Warren Buffett Berkshire Hathaway letters, there's this one paragraph in here about gold. And I find it very interesting because the common wisdom is, oh, gold's just a pet rock. I think that's a quote that Warren Buffett used. Well, let's read this little paragraph here. One friendly but sharp-eyed commentator on Berkshire has pointed out that our book value at the end of 1964 would have bought about 1/2 ounce of gold. And 15 years later, after we plowed back all the earnings along with much blood, sweat, and tears, the book value produced will buy about the same 1/2 ounce of gold. And what is the point for this? He says here that the government has been exceptionally able in printing money and creating promises, but is unable to print gold or create oil. And that's why this just goes along with my theme. And I want to remind everyone that it might not be today or tomorrow, but as the value of fiat currency goes down, or as the value of businesses go up against it, people are going to flock to things that cannot be printed. Of course, some companies will print stocks. Other companies buy back stocks and have less and less shares every year. So it's just on us to look at the market, see what the market is telling us, and then act accordingly. And that's why I want you to subscribe so we can continue to watch these trends and see what we need to do to protect and grow our wealth. All right, hit that like button, subscribe to this channel, and I'll see you next week. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.